Alright traders, I am back again with another video, and in this video you're probably wondering why I said, do you really want to make money trading the markets? Alright, well, I said that in the video because basically guys, you can make money trading the Forex market, trading the crypto market, trading the stock market, or whatever it may be. Because guys, there's one thing that's universal: patterns. There's patterns in the market that are universal, and if you learn those patterns, that also will help you to catch trades. But you got to have a strategy. You're going to get lucky here and there, but that's not consistent money. You don't want to base your strategy or your business on luck. Trading should be your business. If it's your business, you don't want to be lucky at your business. You want to be good at your business. All right, and then you can add some luck in there. But if you're just relying on luck but not being good, you're not going to be good, and you're not going to be lucky all the time. All right, so what we're looking at here is basically the CAD yen. We're looking at the CAD yen, and what happens here is we have a session every Sunday. It's a Forex session, and what we do is talk about the markets. And the reasons we have these sessions is because we plan for this move. All right, we plan for this move. We already see this move developing because price is at this level. All right, so I always tell traders, hey, wait, don't take a trade until the train is at the train station. Once it gets to the train station, then take your trade. Don't take the trade in the middle where you could fall off the train and get your legs ran over. Wait until you get to the train station. So basically on this chart, this is a train station at support. This is a train station at resistance. In between here, the train is going to and fro the train station. When you jump on anywhere in here, you're taking a chance because you're going to be lucky if it continues going higher, or you're going to be unlucky if it drops to the downside. But down here at the train station is where you have support. At this train station, you have resistance. If you jump in anywhere else, the train may fall off the track because there's no support, and boom, you lose the trade. All right. But anyway, when I'm looking at here also, what we do every Sunday, we talk about these sessions, we talk about these pairs, we go through all these pairs right here. And we talk about any trade setups that are going to develop or that we see developing. All right. And what I like to do when you're using TradingView, guys, if you have something that you're looking at immediately, make a green tab there. So like if I'm looking at this Euro Aussie, I put a green flag there. Or else if I'm looking at it and I'm thinking maybe there's going to be something soon. They used to have a yellow one, I thought, but I would have put a yellow. But now I'm gonna put a green if I think there's going to be something immediately. So if there's going to be something soon, I'll flag it with the orange. Okay, so green is now, soon, and I don't need to put no. Just don't put anything. But that's how you could keep tabs to some of your things that you're looking at, and when you come back to look in your charts, you know which ones you want to really go back to real quick. All right, just some things to help you be successful, because trading should be your business. And if it's your business, again, you don't want to be lucky at your business. You want to be good at your business. All right. Sometime you'll be lucky, but you want to build your business on being good, not being lucky. So in order to be good, you have to learn your business, learn what it takes to be good at your business. Trading should be your business. You're probably trading just for fun. You're trading just for money and so forth. Make it your business. You'll care about it more. All right. Because you want to be successful. All right. So if you want to be successful, you need to learn how to trade this. So what we looked at was basically when the market was here. Let's go back to the replay. The market was here. And that's where we already started talking about the market and where this trade was. All right. So we said that we were going to take an entry here at 80563. That was the level we talked about. Then the market gets to that level. And then the market gives us this. All right. Gives us great profit. So currently pretty much like 170 pip trade at this point. All right. So I'm going to show you how we talk about that, what we did. And guys, we do this every Sunday. Every Sunday we hold these sessions. So if you want to become part of these sessions, just become a member of my site right here, fx@oneglance.com. All right. So you come to the site, become a member, then you attend these sessions every Sunday. You get to see which pairs are having opportunities to trade. And we're not just strictly Ichimoku. I use Ichimoku because Ichimoku is a very good system to have, and it can help especially new traders in a way. People think it's so complicated. It looks complicated, but once you learn just the basic aspects of it, it's very good, very good. All right, but here I'm using just the market. All right, just plain old support and resistance. If you build your system off of support and resistance, build your strategy off of that, you'll be successful more than likely. All right, but let's look at this video. Then after you get done looking at the second part of this video, if you really like it, come visit me, like I said, and the chance to become a member, one-time, 1-year elite membership, you can do that, and then you get access to all these webinars. We have a webinar every Sunday, and then you can watch the replays of all the archive replays from previous. Plus we got our courses and everything else. So yeah, you know I'm going to promote myself. I got to do that. All right, but anyway, I really want to do, I'm not out here just to promote myself, because I put a lot of free stuff on YouTube. I put a lot of free stuff on Twitter. So I'm not just here to promote myself. I'm here to tell you, well, if you need more than what I'm putting out there, then you got to come and become a member. All right. Other than that, you could just deal with what I'm putting out there, and it should help you, because basically what I put out there, I believe it can help you enough where you don't really have to be a member. But if you're struggling still to that point, become a member and be consistent. All right. So that's why I promote myself, not because I need to, but because I want to, because I want to be able to still have access to let people know I'm here to help you. All right. So let's look at the second part of this video. Watch why we went from here to here. And if you like the video, guys, please give me a like. If you want to respond, please respond. All right, make a comment. And if you want to get notified, please click the notification tab and get notified of every video that I send out there. Okay? And then the very last thing, my phone is ringing, so I'm going to let you go. Same thing here, another triangle pattern. This is a descending triangle pattern with a flat base. We've been bouncing off of this upper level, a whole bunch of opportunities off of the upper level. And when you're trading to the downside and you're trading Williams %R, that's what you want to trade, these levels. See, it breaks back below, breaks back below, breaks back below. You don't want to trade these bottoms. All right, now if the market's flat, we could trade those bottoms. You want to be trading those tops. And we had a bunch of trades up in here. Now we're at this level here. This is where I can trade this level. All right, I want to trade this as support. All right, because every time it comes down to these levels, that's where I'm going to trade. Now this is a trend to the downside. All right, but you get your correction at the base right here at this level. All right, now here's where I didn't get stopped out. I got confused with the market. The market didn't want to tell me anything. I never traded this because, guys, what did the market tell you here? It didn't tell you anything. It said, I'm red, I'm green twice, I'm red twice, I'm green, I'm red twice, I'm green, I'm red, I'm green, green, red, 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 green. And I said, okay, I don't know what you're doing. Leave me alone, market. And the market left me alone, right? So I waited till the market got up here. And I said, hey, market, I know what you're doing. You're going to bounce off of that resistance. And the market said, yes, I am. You know how I'm going to let you know, Carl? Because I'm going to show you these rejections. And I saw those rejections, and then boom, and then take the trade. And I believe I walked the zone on this one also, because I made this into a little zone. All right. The wick was the zone at resistance. Then when this candle went into the zone, instead of entering the market here, I put an entry up here. And I got triggered here. Still had the same stop loss. And then the market gives me a good trade. Now I'm here. I got a little rejection here. If the market can't close below this rejection, I still want to look at taking a long right here at this point. All right, because I want to see that break above -80 to signify some strength. Now, I may change my entry to something different, like down here, depending on what the market does. But at this point, this is where I'm looking to enter the market at this point. Things can change in the next candle or two, right? This can come all the way down to the bottom, give me a big rejection like this. And then I could say I'm entering here or I'm entering there or whatever. But at this point, I'm already ready for the trade. I'm there. I'm not triggered. If we break above -80, that would probably trigger me for sure. All right. And then I would look to trade up to this level. So we might have a possibility here. And also you could box this in. I haven't been looking at the questions, but I do see some questions. When boxing in, we should use the wicks too instead of the body. Okay, so there's two concepts that I look at. So I use the wick, but sometimes you'll see me just use the body because it looks like, let me try to show you one. Like, I'm going to say, for instance, really, if I look at this area here, so watch. I'm going to go back here. Like if I'm looking at this candle, I don't really look at this wick per se because look, no candles closed outside of that body, which to me is relevant, very relevant. Now, if candles are inside and outside of the body, then I'll move up to the wick. But no candle seems to be breaking the body. Then it does. But I wouldn't be going long here, okay? Definitely. I wouldn't go long here, so it didn't matter if it broke that. Now this is where I'm going to look for a short because we come off of that off that top resistance, okay? But yeah, either way. But usually when now like say this candle never broke this lower level right here, then I would be probably just like this, right there. But if you go down to there, you could see what the market's doing. See, you're at the wick right there. So you're inside that wick. The market has never closed outside of it. So therefore you could then go to a lower time frame. Let me see if I could do it here. Right? And see, now you could trade it like that. You could trade those levels. I went to the hourly. I adjust my support and resistance level because some hour candles will break through a 4 hour or daily support level and look like a breakout, which they're really not. But you could see you could trade those levels now. But going back to your daily, you just wait here, then you're going to take that overall trade. Now, since we touched the top and we were at our boxed in candle, you would have strong confluence to short that, right? And you can see you get your Williams percent R. See, you don't short that Williams yet. But when it goes like that, you probably want to short it. All right. But you want to make sure you know your level where you're going to get in. If you don't know, then don't trade. All right. So we're looking for a bounce off of this level here. And if you know when we're wrong, guys, we're wrong when the market closes below this zone. When it does that, then we'll wait for this. This is what we'll look for when it does this. We'll say, okay, our trade long is up to this point. But if you close below there, market, then go ahead and close below there. We'll wait for you to come back. We'll short you right there. And then we'll go with you with the end pattern. 1, 2, back trading 3 again, and then shooting for 4. We're always trading 3, always trading 3, always trading 3 with our philosophy. I'm going to be a rapper, I think. I might have some rapping skills. Nah, I'm kind of weak at that. But anyway, yes, that's what we're looking at. We're always trading at 3 level. So we don't need to worry about the breakout because we're going to catch the trade better than the breakout trader because the market likes to come back to those levels. And that's when we're going to trade it. So we are looking for the bounce here for the long trade. Okay, let me see. Oh, so Jose had to leave me. He said he'll watch the record and I missed him.